Welcome to the One for the Road podcast. My name is Mr. K. Alongside me, as usual, C Squared. Tonight's topic is tariffs. Little bit of a lot of news on tariffs this week.
Little
Liberation Day
turbulence,
was a. Go ahead.
little turbulence in the market, I would
Yeah,
say.
just a little. Liberation Day was April 2nd, and boy, was it a great day. Luckily, Liberation Day started at 4 o'clock. Of course, when the markets were closed, I think Mr. Trump knew that. That brought on some market turbulence, as C Squared said, on April 3rd and April 4th. And today was just a wild ride on most of the major markets, and a couple we'll talk about. We'll talk about brief history of the trade tariffs. We'll talk about the current U.S. trade deficit and probably what has spurred Mr. Trump on doing this. We'll talk about a few of the countries that were heavily impacted by the new Trump tariffs and some of the impacts there. And we'll talk about some of the people who got hit really hard and some of the people who recovered a bit today.
Well, I would say it certainly was Liberation Day. He liberated some of the people from their gains of the past year.
Yes. So.
not, not, not that I am complaining. I'm actually for this in just a personal perspective. But yeah, there are some unhappy people who don't fully understand the big picture,
Right.
which I think Trump had an article that appeared on Zero Hedge today that basically said as much as that. Stay the course. You're not seeing the big picture here.
Right. I think that's too. I think I called it short-term pain for long-term gain.
You're right. And that's what I think is being inferred by a lot of people who do understand that once you, because I saw another article that basically said that Europe, the EU, is starting to fold. So it was a mere couple of days before countries started to fold.
Right.
That's a good thing, and that's generally a good strategy.
Right. So just a brief history of tariffs. Tariffs go back as far as Washington. And the Tariff Act of 1789, I believe. Give me a second here. Yes, I had it right. Tariff Act of 1789 was pretty much the birth of tariffs in America. Of course, under George Washington, 5% on nearly all imports. Other presidents that were big fans of tariffs include Jefferson, Lincoln, big time. Yeah. Lincoln has a quote, "Give us a protective tariff and we will have the greatest nation on earth." Other presidents that were fans prior to Trump, McKinley, Teddy Roosevelt.
Well, and so the rumor is that tariffs funded lots of money into the treasury, and there was no such thing as income tax for most of that.
Right.
So if we can just restore that, that would be superb.
Yes, that would be superb. No IRS, no taxes. That would be great. So the current U.S. trade deficit, as far as the stats, as far as February 2025, we have a trade deficit of 122.7 billion. That is down from 130.7 billion in January. Our imports are at 401 billion. And our exports are at 278.5 billion. So my feeling is that the Donald is not happy with those numbers and is trying to get that down.
Yeah. And so I would completely agree with that. Why are we again the patsy of the world?
Right.
So he's doing the right thing in the aspect of, you're funding all this different stuff through USAID. You're getting blistered by tariffs and not able to export your products on a level playing field. I mean, that essentially says who was running this shop for the
Right.
last not the last 4 years, for the last 24
Right.
years or 34 years. You
Right.
know, what's been going on up there? And
Yeah.
who is lining their pockets in order to disadvantage U.S. businesses and the U.S. taxpayer.
Right.
So
Right.
I'd love to know that answer too.
Well, I mean, the Wikipedia page is basically like the last president you ever heard anything about tariffs from was Teddy Roosevelt.
Right. Yeah. Yeah.
I
Yeah.
mean,
Exactly.
in our lifetime, what president ever even talked about tariffs in a meaningful way? I mean, now and then you'd get some stuff like even Biden was like, "Oh, we're going to triple the tariffs on the Chinese lithium ion." And I was like, "Well, doesn't that defeat the purpose of your EV dreams and stuff?" And so, yeah, heaven
Yeah, and how
knows.
much of that lithium actually came from China is the question. How much of it came from Africa? And the other aspect of it is why is that even that relevant? Why haven't they gone to sodium ion
Right.
batteries since salt seems to be quite cheap?
Yeah.
Since we throw it all
Prevalent.
over it was so cheap I threw it all over my
Yeah.
sidewalk when the ice storm came.
Yeah. And it didn't cost you a fortune. Uh, yeah. So some of the countries. Uh, so what's wild is a lot of the companies at the top of the list are companies you haven't really heard of. So the formula that Trump used was he's got tariffs charged to the U.S. Well, the reciprocal tariff's going to be half of that. So, for an example, China is supposedly levying a 67% tariff on us, which is probably believable.
Yeah,
And he goes, okay, what's half of 67? Let's just call it 34. I mean, what is it? 33 and a half.
right.
Let's round up 34. So that's your new tariff. So you see this similar formula being used with all the other countries across the world. Uh,
And I honestly think, I don't know because I'm not a tariff expert, but the bottom line is that seems quite generous.
oh, yeah. And
Hey,
what's
you got a
funny is,
67% tariff against us. How about reciprocal 67%
yes.
tariff against you? Man,
So the description is the reciprocal USA discounted tariff. That's the actual name that Trump
right,
put
right,
to all these tariffs on April 2nd when he wheeled out the chart. It's called the discounted tariffs, and they're half of what they're doing to us.
right, right.
And for eons before that, I think it was 10. Everybody's at 10 or something.
Yeah. Well, and the bottom line is that again, why should we be paying you anything?
Right,
And, let's call this a level playing field. And if you don't like that, oh well, go pound sand.
right, right. Some of the countries. So if you look at this list, and Vietnam's at fifth at 46%.
Well, I think they may have that. There was all over the news that they may have dropped that,
Right.
dropped the tariff on them because they agreed to drop tariffs on us.
So their tariff on us was at 90.
Well, right. Okay.
That was
So,
the deal.
yeah. So they've obviously seen the light in a short period of time.
Right,
I
right.
read that them and Taiwan were the places that immediately saw the light.
So if we look up Taiwan was charging us 64%. So we were going to levy a 32% reciprocal on them.
Yep.
So that's when they started losing it.
Yeah, right. Okay, there you go, man.
If we look at, I mean, what's wild is if you look at this list, I mean, I'll just name off the top five here. Lesotho at 50. So, like I said, folks, just double this in your head. We're going to charge Lesotho 50%. They've been doing us at 100. Laos is at 48%, Cambodia 49%, Madagascar 47%. So I'm like, it's terrible that they were killing us and we're killing them back. But I mean, these countries don't scream one, recognition, two, big, or three, allies or friendly partners of us.
Well, and so you look at this and say that there was a migration of some manufacturing out of China long before this. And you had, Indonesia, South Korea, Vietnam taking a lot of that manufacturing work from them, and even before the tariffs. So
Right, right. I mean, South Korea's way up there, I think, too. China's right in the middle at 34%. I mean, that's the one that really stands out, which I think that might be a little turbulent. They're digging their feet in and saying they're still keeping their 68% tariff and may even raise it. South Africa's at 30%. They're pretty high and well known. Switzerland's at 31%. That's pretty high. India, I think, is in the upper 20s. South Korea's at 25. Pakistan, 29%. India's at 27%. Japan's at 24%. So they've been hitting us with 48%. Israel's at
the question becomes is what I would love to see an analysis of what we actually export to these countries,
right,
other than grain and farm products.
right.
So I might have considered doing it on a product by product type of basis.
Right, right. The one that scares me is we've got a deficit and we've been importing, like in 1 month, we imported $401 billion. I got to think a lot of that was China.
Right.
And man, there's some people who make a lot of products made in China, but they're an American company.
Oh, yeah.
And now comes a 34% tariff.
Yep. American retailer.
Right.
And they don't make squat. They basically sell a bunch of products that are made in China. And so let's see how that pans out. Maybe
right.
had more diversified supply chain.
Right. Right. Yeah, it's just scary. So let's talk about the market a little bit and some of the weird stuff that's going on. The one thing I forgot was Liberation Day is April 2nd. April 5th is everybody 10%. So that was kind of cool. But the Trump chart doesn't start till April 9th, which is 2 days away. Despite that, the market just went crazy once they saw those tariffs. Now, the wild thing is, all of this horrible declines in the market were due to emotion and things that might happen that haven't happened yet. I mean, we have no idea what the effect of these tariffs are.
Well,
nobody has a crystal ball.
And I will tell you, John, some people are saying that the tariffs are a smokescreen for the big hedge funds to sell at the top.
Right.
And actually I listened to somebody today about triggering what he called the three horsemen of the apocalypse. And which he claims are the apocalypse of a bear market. And what he basically said was the yield curve inversion being one of them, that the yield curve uninverted in like December of 2024. So one of his three horsemen were triggered more than 90 days ago. Trump wasn't even has not
wasn't
had
even
not
in.
even assumed office yet.
Right,
Right.
right.
So, and I mean, the other two I think he mentioned were treasuries outperforming the S&P, which that did just happen. And I'm trying to think of what the third one that he actually mentioned was. I can't recall that, but anyway, the biggest one, the yield curve uninverting, which some people claim that alone is the symbol of a recession coming, happened like 3.5 months ago.
Right,
And so,
right. The other thing, as we've said on a couple of our other podcasts, is the Mag 7, which has been a staple, and where they go, the market usually follows. I mean, a quick example is they were up like 50%. Last year, S&P 500 is up 24%. Well, this year, the markets will go where the Mag 7 goes, and starting like in February, they've been in nosedive, and boy, Liberation Day didn't do them any favors.
right. So I think that there was some sell, and so hedge funds rule the market.
Right,
Big trading operations and hedge funds, big bank trading operations and hedge funds truly do rule the market. So
right,
the bottom line is, how long have they been selling? I'm thinking it's actually longer than the last week and a half. And I think
right,
these guys could smell the top. And which
right,
brings up the oddity today, and I will just do a
right,
short comment on this, of the fake news of Trump, uh, putting a hold on the tariff for 90 days, which makes the market hockey stick up in 30 minutes. The Qs gain 40 points in 30 minutes, which is
right,
unheard of.
right,
And then all of a sudden it's like, ha, that was fake news. And then the market corrects back down again. So the question is, and me being a slight conspiracy theorist, um, will we ever find out who reported that fake news that
right, right,
likely enabled many hedge funds to sell considerable holdings at a much more favorable price 30 minutes later, and then all of a sudden, after I've sold my holdings that I wanted to unload and loaded up on a bunch of short positions, then Deep Throat with a handkerchief over the phone essentially calls in and basically says, yeah,
Yes.
just kidding, that's fake news, and the market corrects
Yeah,
back down.
yeah.
So, will we ever find? Will the FTC ever find out who picked up the phone and made that fake report?
Right, right. And it was the wildest thing in the world because I looked down at my phone a little before 10, the market's down. And then I was talking to somebody, he goes, the market's up. I go, what do you mean it's up? And I look at it, it was up huge. And I was like, in like minutes, like you said, in that 30-minute span, all of them, S&P,
Oh
Triple
yeah,
Q, Dow,
yeah.
all of them.
So I mean, at one point in time, I think the Qs were up 4% from being down
Right,
3%. That's a
right.
seven. That's a 7% swing
Yeah,
in 30 minutes.
right.
Somebody made a lot of money on that. I
Yes.
wish it was
I
me.
was not one of them.
That's right. I wish
I
it
was
was
not
me.
one of them. So I pulled a 5 day on the sectors in the S&P 500 on it took everybody down. There were no prisoners. So we've got over the last 5 days, the S&P 500 has been down 9%. All the sectors are down. It's just who's been down the least and who's been down the most. Consumer staples at negative 4.9 was the best sector. Utilities only suffered a 6% loss. Communications at 7. If we get down to the guys who got really hammered, energy was down 15. Financials and tech were down 11. Materials and industrials were down 10. Real estate down 9. So Liberation Day took all prisoners.
Yeah, very interesting. Now, I did watch another report that I will say that basically says the pain, there may be a bounce, a dead cat bounce, but the pain will continue because banks are, but the financial sector is hating it, and the pain will continue until the Fed is given the green light by presumably the Donald to institute QE 5 and bail out all the banks and the hedge funds. And when they in fact do that, then you will see massive inflation reintroduced into the economy. So basically, their strategy was we are bottom fishing on commodities, silver, gold, copper, oil, etc. We're bottom fishing for that, in hopes that in the before the end of 2025, the Fed will have injected QE in order to save a bunch of failing financial institutions.
Wow.
So, interesting perspective. I'm not saying that's true, just thought it was an interesting perspective.
Right. If we look at today, again, today kind of seemed to be a bounce back. We actually had some industries that were up. S&P was only down less than a percentage point. Communications were up. Tech was up. Financials were only down a little. Real estate was down the most today, followed by materials and utilities. So a little better today, with probably some crazy volume.
It's a shame that they don't break that the real estate sector out by areas of the country, because I can tell you in the Midwest, real estate was definitely underwater.
Yes. God, we've gotten so much rain.
Not to laugh. I feel bad for
people
who have had their houses flooded by rivers and streams.
Right. So, what do you think? The pain going to continue for a while, or are we turning the corner here?
Dead cat bounce somewhere in here. It's inevitable that you will get a dead cat bounce somewhere in here.
Right. Yeah, I think tomorrow's going to be a pretty good day, and we'll see from there. I think when the news hits that these have really gone into effect April 9th, we'll see what happens. The other big question is, are there going to be other countries? I keep saying companies because all I think about is the stock market. Are there going to be other countries like Vietnam and Taiwan that are going to do a no mas?
Well, the EU basically, they did not completely fold, but there was another Zero Hedge article, I believe, that said the EU says, let's talk. We're definitely not ready to move forward with you slapping us with these tariffs. So let's talk.
So the
Let's
European
talk is
Union,
good. Let's talk is good.
yes,
Yeah.
yes. The European Union statistics where they've been hitting us with a 39% tariff, so we were going to hit them with a 20%. So
There you go.
again, the discounted tariffs, which I love that description.
It really is a discounted tariff,
Yeah. I
especially
mean, he's not matching.
considering some of the stuff that they do, and I do like German cars. However, my understanding is that all the parts are made in Germany, and that's why when you go to perform any type of maintenance on a German car, you get socked for like 4 or 5 times the cost of a domestic vehicle because you need to have parts that are shipped from the manufacturer, which
Right,
happens to be in Europe, shipped to the United States, which is extremely costly, as opposed to either A, aftermarket parts, or B, um, uh, parts that are manufactured here in the U.S.
right, right. And that's a good point in that I hadn't thought of it. A lot of our imports are vehicles. I mean, like you said,
Well,
I
but
mean,
so let's talk about those vehicles. Other vehicles I like, Japanese vehicles.
right.
Honda,
Hmm.
Marysville, Ohio.
Right,
I guess depends on where the parts were
right,
manufactured, and I don't
right.
know the answer to that. But Nissan is somewhere down south.
Oh, I thought they were Tennessee.
Are they Tennessee?
Yeah,
Well, that is down south,
yeah. It
but
is
the
south of
bottom
us.
down south from us Northerners. But
Yeah, I thought
I
Nissan
thought
was
I
Tennessee.
honestly, John, I was going to say I'm glad you said Tennessee because I was going to say either Mississippi or Alabama. I thought they had a big plant down
Oh,
there.
they could. I thought they had a huge
But
one in Tennessee.
and then Toyota was in the Ohio, Kentucky area, and
Hmm.
then they moved to put a plant in Texas. So the manufacturing of those parts are absolutely, and this is why I said that I think Trump should have maybe tried to do a little bit more analysis, and maybe he will, to say what is the difference between a tariff on making parts and actual manufacturing of those parts, because Ford is big on making parts in Mexico and manufacturing them in the manufacturing the vehicle in the United States.
Right,
Um, uh, I'm not saying that that's the greatest idea in the world, but it appears that Japanese manufacturers do the same thing, and so that manufacturing work is awesome. We need those jobs. And the bottom line is, would it be nice if we manufactured the parts here? Yeah, it would be better. But you don't want to. You want to kind of delineate that this thing drives an actual presence of this company in the United States. And
right,
so
right,
let's play nice, because they are actually have done the manufacturing of the vehicles here.
right,
And,
right. And they've employed thousands and
right,
thousands
exactly.
of
Okay.
Americans
So
at
there is
good pay, too.
right. So this is we need if we're talking reciprocal, that is a fairly positive reciprocal gesture that they have done for decades. So
Right, right,
let's be nice. Let's play nice. Don't throw sand in the sandbox.
right.
And,
You wonder if it, and again, it looks like this might be the way to start the conversation, is here you go. And it's like,
right.
whoa,
Yeah,
whoa,
yeah.
whoa, let's meet at the table and talk this through.
Well, and so back to one of my favorite boxers, Mr. Mike Tyson, and
Right.
everybody's got a plan until they get punched in the
Right.
face.
Right. Right. Exactly. Yep.
And
Yep.
so, bang,
Right.
you just got punched in the face, and now you're stepping back, and we're going to talk, and you know that I'm dead serious.
Right. 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 I
So
wasn't fooling around.
I wasn't fooling around. Okay, so there you go, Han. And now we're going to have an honest discussion about what we're going to do, and because if you plan to like waste time for till I got out of office and say, well, maybe we'll do this, maybe we'll do that. No, that's not going to happen.
Right. Right. Right.
I'm
Right.
dead serious. Do you want to come
Right.
talk now?
Right. Right. Right.
Yeah.
Uh, so I think, the way I remember, not that I lived back then, but after the war, it seemed that World War II, by the way, not Vietnam or some others, or one. After WW2, it seemed that the American economy was humming quite along, and it seemed I would gather that we probably didn't have a trade deficit problem like we do today in the 50s, right after the war. And it seemed like a lot of products were made in America and a lot of people bought America. And we've gotten away from that. Do you think Trump's trying to get to that area again? Like, well, people are going to buy Ford if Ford is 6-10 grand cheaper than Honda with
That,
these
no,
tariffs.
no, I agree. I agree. It's hard to justify that. I will say after World War II, we became the reserve currency for 20 some odd years. And that's really when the second leg of negotiations for uh, global finance had occurred after World War II. So, and that's how we became really the reserve currency from England. And that lasted until, yeah, the late 60s, early 70s, when certain countries asked for their gold back. And it was quite clear that that was going to be a problem.
Right, right, right.
they So yeah, so Bretton Woods is what I was looking for. The Bretton Woods Agreement after World War II
Yeah.
um, made things really good for the U.S. The U.S. was king for 20 some odd years after that, until it was apparent that they were printing more money than they actually had reserve
Mm.
assets to back that up, which is we wouldn't be the first country to do that.
Right.
So that is now everybody's doing it. It became in
Mhm.
vogue. So
Exactly.
nobody has the actual assets to back things up. So what I think is that yes, we can get back to a manufacturing place in the world. I think it needs to be. I don't think we should be looking to manufacture the toy surprise in your Happy Meal, and
Right.
I
Yeah.
think we
Yeah.
should be manufacturing, high end robotic assembly
Oh
lines
yeah.
and stuff of that nature, and um, but we will see automobiles,
Right.
high end robotic assembly lines, stuff that is um, high value manufacturing. And
Yeah. I do think. I mean, if these tariffs go through, there is going to be a decision by the American consumer. I mean, I'm thinking grocery. I mean, you're going to see stuff like, you know, the American product next to the Chinese or the Mexican or the Vietnamese product and be like, wow, ours is so much inexpensive now.
yeah, right. And I'm not so sure that we in the grocery store that we have not. uh, seen like many domestic product. I think most of the stuff in the grocery store, if I'm not mistaken, is domestically
Right.
manufactured.
That's true. That's a
And
good point.
um, uh, so so will you see things at Walmart that are
Oh yeah.
Costco or stuff that are manufactured items? With an American competitor? Sure, absolutely, maybe. Um, the bottom line is that I will say that the other issue with that is that you have robotics taking over
Right.
lots and
That's true.
lots of. So now, you were talking about, you can give us money to work people 12 and 14 hours a day for 20 cents US. And well, that actually becomes irrelevant when I have a machine doing
Right.
that work,
Right.
and it
Exactly.
goes
Automation.
24/7 for 3.5 cents worth of electricity.
Right.
And there
Right.
is no benefits and stuff of that nature. Not that in third world countries, which was a damn shame, that there were benefits or anything of that nature. And I think it was uh, not a happy place to be.
No,
Mm,
geez.
And
I'll say.
but so um, but I look at that aspect and say that I think that manufacturing in itself is changing substantially. Just like, you know, I've been in 3D printing, played around with 3D printing quite a bit, design some stuff mathematically in Python, and essentially
Oh,
printed those things. Very very cool. And what what happens when you are able, and I think they call that additive manufacturing. What happens when I'm able to do that, and I've determined the ideal market for that is a part on demand. So essentially, I'm not manufacturing 100,000 of these alternators for this car, because the reason I did that initially is it didn't make cost effective sense to start this lineup, to do the tool and die and start the lineup for less than a run of 100,000. So now,
mm,
if I even know I was only going to sell 18,000 of these things, and then I'll throw the rest of them on the aftermarket or whatever, and at what point does it say that I can print these things if I know I'm only going to sell 9,000 of these things because they're pretty quality made, man? I print these things on demand. It
right.
doesn't it
Right.
doesn't make,
Yeah.
it's a 3-day turnaround time from whatever online retailer you like. And what they do is when you place the order, they press the print button and
Right. Right.
it
Right.
actually manufactures your part on demand,
Right.
and then ships it to you.
Yeah.
So,
Yeah.
I don't know, but we're way ahead of ourselves. I think I'm way ahead of myself, because we're right now. You're just looking at tariffs. That's not a complete reality at this point in time. That may be the Trump long-term strategy, but it's not a reality at this point in time. So again, we're going to put tariffs in place to make that a little bit more advantageous to us and to
Right.
raise some capital. And you know what? If you didn't fully think you should take some chips off the table at the top of the market, yeah, you can't let it ride for. My strategy, despite the fact that my record in Vegas and the stock market is pretty weak, admittedly, and the saying let it ride one too many times,
Yes.
generally not a solid strategy.
Yeah. I took some profits, but then I let it ride on the Mag 7, and
Yeah,
I am
well,
feeling some
some of the mag,
short-term pain,
I
but
think,
hopefully some
well,
long-term gain.
yeah, I think some of the Mag 7 will absolutely come back, and we know
Yeah,
who I like.
NVIDIA.
And yeah, right, exactly. I think that but it'll be because guess what? The PE works out. Their
Right,
PE
right.
ratio works out. So
Fundamentals.
it's either going to work out or it's not going to work out. And the ones who had a high PE ratio and were producing stuff that was vanity type products,
Mm,
opposed to this is serious innovation, and are less likely to recover
right,
than companies who are serious innovators who will have
right,
orders out the yin yang, who potentially already have orders out the yin yang. We don't know, but
right, right.
so
Yeah, I'm not too, like I said, I think it's going to be short-term pain, long-term gain. The earnings haven't come out yet. The last time all the Mag 7 reported earnings, they exceeded, and they're making billions of dollars. Tariffs aren't going to stop them from
yeah,
doing
yeah,
that.
I agree. I agree. So we shall see. And
Yeah.
you know what? Again, I think the market showed signs of cracking before the Trump
Oh,
tariff.
yes.
You
Yes.
know, so
Yes.
I think that you saw the top in early 2025, and you were seeing some cracks in the market anyway. So you're going to get a correction. I think you're going to get
Yep.
another bounce back up, and then I think that very dependent on how these tariff negotiations go,
Yes.
you're
Yes.
either going to see the market priced to perfection. In other words, I'm going
Right.
sideways for the rest of the year,
Yeah.
um, or you're going to see negative ramifications from the tariffs for the
Yes.
companies that are most impacted
Right.
by
Right.
those tariffs, and they're going to get hammered. And
Right.
the way it is, man.
And usually, when there's down markets, there is a sector that does survive and does well, even in down markets. And it appears that the ones that have strong U.S. manufacturing bases and a strong U.S. customer base, and even worldwide, are
Yep.
going to be fine and likely do well in the stock market.
Yeah, right. No, exactly. I mean, I think now the pendulum swinging back, and PE is going to be evaluated. And
Right.
you're going
Right.
to say,
Yep.
what is your quarterly and annual price to
Yes.
earnings? And if this is too high, and I don't think you have anything uh, very innovative in the pipeline, then guess what? You're a prime candidate to correct down on price. If you got something good going on hand, then then maybe you're worth an elevated PE. And if you're actually got orders in the backlog
Right.
and are selling the crap out of what you own, then chances are your earnings are high enough to sustain that. You know.
Yeah, I think companies with strong fundamentals and a good track history of meeting or exceeding earnings and have products that people need and want,
Right.
to
Right.
your point.
Yeah. Yeah.
All right, C squared. I don't have anything else. I think you ready to wrap it up here?
I'm ready to wrap it
All
up.
right, I'll
It was
just
a
do
short
my,
one. Maybe we'll see where things are next week.
yeah,
Who knows what kind of fun things we'll have wound up then? But maybe
right.
we'll just do a brief revisit of the market or something.
Yes. Yes. I'll do some outro business here. You can reach us via email at onefortheroadpodcast@gmail.com. Our soon to be constructed website is onefortheroad.net. We are available on YouTube. Please subscribe and like us and view us on YouTube. Our podcast is available on audio format on Spotify, RSS, and Podbean. For C Squared, I'm Mr. K. Have a great week, everybody.
Thanks.
Pray the market goes
we
up.
always appreciate it. Have a great week.
We appreciate your support. Have a good week.